House price growth looks set to judder to a halt in 2018 or at best manage a small below-inflation rise, as the twin spectres of Brexit and rising interest rates put the brakes on the property market. Following what some have called a lackluster year, homeowners and those looking to sell in the coming months have been told to expect an underwhelming and subdued 2018. With a number of leading commentators predicting UK house prices will either stay flat next year or perhaps tick up by 1% or so. However, the prognosis for London, which according to estate agent Savills has experienced house price growth of 70% over the past decade, is more downbeat, with many economists forecasting that prices in the capital will once again slide into negative territory. A number of commentators are penciling in UK average price growth of about 1%, which would mean property values falling in real terms. Of the two big lenders that operate well-known price indices, Nationwide said it expected property values to be broadly flat in 2018, with perhaps a marginal gain of around 1%, while Halifax allowed itself some wiggle room by predicting UK growth in the range of 0% to 3%. Meanwhile, according to a Reuters poll of 28 housing market specialists published last week, property prices will rise by 1.3% nationally, but fall by 0.3% in London. The former figure is less than half the current rate of consumer price inflation. But while much of the language used in the forecasts is gloomy, a weakening market, muted and another tough year are among the words and phrases that crop up. Such predictions are likely to be welcomed by the burgeoning numbers of aspiring first-time buyers who currently cannot afford to join the housing ladder. Many homeowners had become used to viewing their property as a money-making machine, and some will find it hard to disagree with the assessment of Miles Shipside, housing market analyst at property website Rightmove, that homeowners have had a good run, with the national average price rise over the last 6 years totaling just shy of 31%. Equivalent to 4.6% a year. Economists predict that a range of factors will weigh on house price growth in 2018. Continuing economic and political uncertainty in the run-up to 2019, when Britain is set to leave the EU, plus the possibility of further interest rate rises following November's 0.25% base rate hike, falling real wages, weak consumer confidence and mortgage affordability issues, could all act as a brake on the market. However, shortages of homes for sale and continued low levels of house building are likely to support prices, while last month's abolition of stamp duty for all homes up to £300,000 bought by first-time buyers could provide a boost to those looking to get on the ladder, provided it does not push up property values. The stamp duty cut was part of a package of government measures designed to address the UK's housing crisis and boost the housing supply by 300,000 new homes a year by the mid-2020s. But last week the Royal Institution of Chartered Surveyors, RICS, said many of these measures would have little bearing on 2018.